Hello, my name is Ray Franklin. I'm the Senior Commodity Analyst for Energy Professionals. Today's video is a summary of my August 10th Energy Update. And to help you better understand where we are today, in today's report, I will be referencing several reports written over the last 6 months, starting with my June 28th Energy Update. In this report, I said, as you can see in this 20-year chart of natural gas, the recent rally to a new higher high above $3.34 confirmed we were likely in the early stages of a long-term bull market, and the average price of natural gas would remain high several more years. And as you can see in this chart, since my last report, natural gas extended its rally to a new high at $4.20 and continues to form a pattern of higher highs and lows similar to 2001, 2012, and 2016, when prices were higher at least 3 years. The question is, with pricing above $4, is it too late to lock in pricing? In today's report, I will explain why I believe it is not too late. In fact, it is more important than ever to lock in rates longer term. In my May 3rd Energy Update, I said our government's fiscal policies would likely lead to inflation, which would adversely impact your cost of doing business. In response to the corona pandemic, our government increased deficit spending at an unprecedented rate, and the Fed aggressively implemented quantitative easing, which has flooded the monetary system with cash, and these policies increase the risk of inflation. Since my May 3rd Energy Update, additional spending is now on the horizon, as we are near passing a $1.2 trillion infrastructure bill, and the Biden administration wants another more sweeping $3.5 trillion package that encompasses priorities left out of the narrower measure. This includes Biden's plans for childcare, healthcare, education, and climate. Clearly, the amount of spending proposed ratchets up the risk of inflation, and as I stated earlier, although pricing is above $4, I don't believe it is too late to lock in pricing. But to understand why I believe it's not too late, we need to look closely at the previous chart. When I look at a chart, I want to understand the fundamentals supporting the price action. From 2001 to 2011, this was prior to horizontal fracking. And as you can see, pricing was extremely volatile, trading from $1.76 to near $16. In 2012 to 2016, during the Obama administration, horizontal fracking increased production. But at the same time, this administration increased regulations on production, and prices ranged from $1.90 to $6.49. In 2016 to 2020, during the Trump administration, regulations inhibiting production was lifted and production increased to new records, and prices ranged from $1.44 to $4.93. The question is, based on the Biden administration's present policies, what will natural gas price range likely be from 2020 to 2024? Only time will tell, but as I wrote in my February 2nd Energy Update, early in his administration, President Biden signed an executive order directing the Secretary of the Interior Department to pause on entering into new oil and natural gas leases on public lands and offshore waters, while beginning a rigorous review of all existing fossil fuel leases and permitting practices. President Biden also directed federal agencies to eliminate fossil fuel subsidies as consistent with applicable law. The Biden administration, similar to the Obama administration, has increased fossil fuel regulations, which inhibits production, and in conjunction with the amount of spending proposed, increases the risk of inflation in all areas of our economy. Over the next 3 years, I don't believe we'll return to the pricing we experienced from 2001 to 2011 prior to horizontal fracking, but it is highly unlikely we'll return to the pricing we experienced during the Trump administration in 2016 to 2020, when regulations were lifted and production increased to new records and inflation was really a non-factor. I believe we will likely return to pricing similar to what we experienced during the Obama administration. But prices north of $6.50 is certainly possible. But the good news, if you look closely at this chart, you'll notice a red circle I placed for pricing from 2022 to 2024 on the far right of the chart. As I explained in previous reports, the good news is natural gas is presently experiencing a market phenomenon called backwardation. And backwardation occurs when nearby contracts sell at higher pricing than contracts further out. And prices for natural gas in the forward markets are trading near $3. And I believe 3 years from now, you may look back and realize there was only one cost of doing business you could have stopped increasing: your cost of energy for natural gas and electricity. Therefore, I believe it is in your best interest to not delay and secure fixed rate natural gas and electricity rates at this time. And hopefully this video helps you appreciate why this is so. And until my next report, please take care.